I want to bring in our contributor for the hour. We've got Bob Lane back with us. He is Explosive Options Technical Analyst, a great voice to have when we are looking for clarity in the market, because sometimes when the sentiment gets over its skis, you can bring us back to earth with the technicals. I want to start on the inflation data. We saw the market have a significant move to the upside. We're coming in just a bit off of that. Yep. How would you describe the market reaction?
Quite a bit of a surprise, Maddie. I was looking for a little bit of an increase in inflation over the prior month, over April, and we came in with a 0.1 print on the core number, which is a number that the Fed really pays much more attention to than just the headline number, even though the headline number did come in actually a little bit less than expected as well, 2.4% annualized. I think it's important to recognize that inflation over the last 3 months has been heading lower. Yeah. Just one print is not all that important, but as the Fed has talked about in the past, Chair Powell has mentioned in several of his press conferences, what's important is to pay attention to the trend. And the trend, what he looks at is something like about 3 to 5 months worth of data in a row. So now we have 3 prints in a row. We have March, April, and May that have shown very much lower inflation. Prices are starting to stabilize, which is what the Fed is looking for. I think now that rate cuts are back in the conversation at next week's meeting. And I know some people have already come out and started talking about that as well too. Yeah. But I think it's a serious conversation that the Fed has to have. I think the last projections that they had back in March, Maddie, was for 2 rate cuts in 2025. Yeah. I still don't think that's going to change next week when they set the new projections coming out in June. But I do think that there's going to be a legion of people on the Fed in the voting block of the Fed that's going to start saying, hey, listen, you know what? The proof is in the data here. We've been paying attention to the data. We need to start talking about rate cuts again.
And what's interesting is the economists that we've spoken with throughout our programming this morning have said, look, don't fully trust this because it doesn't have the totality of the tariff policy baked in just yet. But the Fed can't think about the tariff policy impact until it's shown in the data, right?
That's the squishy part of this whole situation here.
Yeah.
When are price increases from tariffs actually going to be reflected in the data? And really, it's hit or miss over here. It could be next month or it could be 6 months from now. So I think that is the reason why the Fed is taking a much more cautious approach as to Fed policy going forward. They don't want to make a policy error here that they can't suddenly walk back. And also, you have to remember that Chair Powell is going to be in the seat for about another 11 months. I think May is his next term is going to be up. And who's going to be in there to replace him with a similar policy that he's got in place?
Yeah, well, it's interesting too that you bring that up because we have some reporting indicating that Treasury Secretary Scott Besson is being considered by the administration as a replacement for Chair Powell. But that's so far away. It makes me wonder to what extent you think the market is going to focus on who that next Fed chair is.
I also ask, where is Scott Besson serving the best? Is he serving the best as the Secretary of the Treasury, or is he going to serve best as the Fed chair? I don't know what the answer to that question is, but I certainly think that as of now, for the first 4 months of the administration, four and a half months of the administration, Secretary Besson has been doing a fine job, at least, if not corralling people around policy with trade and so forth, but also in talking with Chair Powell, keeping interest rates moderate, down 4.5% on the 10-year rate and so forth. He's already stated that, anything above 4.5% on the 10-year is danger zone. So I think that he's serving a little bit better as the Secretary of the Treasury. And I think working together with somebody in the Fed, he has breakfast every week with Chair Powell, right? And so he's working very closely with him. I think they have a good relationship.
Yeah. Well, let's talk about the technicals as I tease, because that is, of course, one of your expertises that we love to tap you for. I mentioned earlier the S&P 500 about 100 points away from its all-time highs. What are you seeing in the technicals that indicate whether or not we're going to get there soon?
Well, we're certainly overbought right now. And markets are somewhat overbought, and we had a strong rally on Monday, and we started down yesterday and rallied back as well too. And we did have a good start to this morning. We are overbought, but now just understand something. Overbought is just a condition; it's not a signal. And what's the difference? The condition can last for much longer than most people realize or most people expect, right? And so it's not until that condition starts mattering that we have to pay attention to what is the signal. And so we could continue to rise up to new all-time highs, maybe even beyond that, before it actually starts to matter. But I think when we do have that overbought condition, Maddie, we have to take a little pause here, have a little protection on, raise some cash, and do some house cleaning in our portfolios. Wait for that next opportunity to come along, and then if it pulls back maybe 1%, 2%, 3%, something like that, that's probably our opportunity to get back on board.